Welcome back to the channel. This is Living Ecosystem Design with Neil Campbell. Tonight we're going to be talking about an article I recently published on LinkedIn on the 15th of February called A Smarter Alternative to Abolishing Property Tax in Georgia, the Property Savings Account Model. This model was inspired by a story I heard about a 91-year-old lady who was bedridden and wasn't able to keep up with her tax bills, and she lost her house to tax lien. And someone bought her property for around $3,500 and took a house that had hundreds of thousands of dollars in equity. This is the reality of a lot of people in this country who don't have good people in their lives. They're not able to keep up with the bills that always keep coming. They never stop. And when these things happen, people who have paid their dues are forced out on the streets, on an already crowded street of people being homeless because they don't have the support or the community structure, if you want to call it, to ensure that their interests are protected. And so with this concept, all I've done was draw some inspiration from the existing health savings account that is available for those who have a high deductible health plan. And all it does is allows people to contribute to that plan, which has tax advantages as well, where it grows. The local jurisdiction can take fraction of the initial years of property taxes into this account, so it can grow, let's say, up to 20 to 30 years. So the whole concept of it is, if you have a 30-year mortgage, once you pay your mortgage off in 30 years, you should also be freed from paying property tax as well, because this account grows into a very safe investment, such as an S&P 500 index, where it can grow and recover when the market goes down and goes eventually back up, versus other type of investment that you'd have to worry about, is it going to last the length of the mortgage or even after the mortgage is paid. So with this concept, if we were to get this approved through the Georgia General Assembly, it can definitely solve a lot of problems. We hear talks of other states saying that they're going to try to abolish property tax. Florida is leading the way in that, saying they're going to try to abolish property tax. But once they eliminate property tax, the burden of paying for schools, police, and you name it, all those different services that depend on property tax will have to go someplace else. And usually it'll go places you don't like. You may have to go to your sales taxes. You may have to go to your whatever. It's going to come out somewhere, and it's going to increase the cost and make it uncomfortable for people when it could come out a more smart, intelligent way. My concept is using the market infrastructure, the investment market infrastructure, to use returns to healthily grow over time to pay for the tax burden. It's similar to some whole life policies where it's called limited pay policy, where you pay into the policy for a certain amount of years as it matures, and then after a certain amount of years has passed, you no longer have to pay the premium anymore, because the policy makes enough money to pay for itself and give you actually cash value and buy additional face value in the actual policy itself. Oh, Lord. Now, with that idea, we're able to solve big problems that have not been solved in decades, where people can no longer have to worry about the concern about being on the streets. They can actually be inside of their homes, right? Especially during the ages where you're older and you need a comfortable place to kind of like live out your final years. And not only that, for working families as well. You know, a lot of people are stressed out every year where Your income is level, is not really increasing much with the cost of living. But then you're seeing your property tax go up and up and up because there's new features coming into your neighborhood. How do you offset the burden of paying property tax and upkeep? So some of the other elements in this plan as well is to include other qualified expenditures such as HVAC system, roof repair, changing out windows and doors, redoing your deck because it's been eaten up by termites or insects or these carpenter bees that like to bore holes into the wood and so forth. Anything related to your property can be spent from this account once it has grown and matured enough to can absorb the financial cost of whatever you want to take money out for. So this is the concept that I really believe we should definitely have our state legislators take a look at to find out how we can use the existing financial markets to actually bring forth a solution that can solve massive problems in millions of people's lives, especially our seniors who are no longer able to keep up with the constant bills that come to your inbox, your mailbox is always all these bills coming, and you'll forget. And you shouldn't have to suffer to lose your home just because you forgot. You've paid your dues. You've paid your dues to society. What it's 40 years, 50 years, 60, 70, you paid your dues. And if you paid your dues, you should have some measure in place to ensure that you don't have to be on the streets after paying off your house and paying your debt to society. And so as I go through it, we have measures in there too that helps to level some of the concerns people are having in areas that have a tax allocation district. So for those who don't know what a tax allocation district is, in a simple nutshell, it's where a different layer of costs is added to your property tax annually. And that goes towards investing in new projects and developments to further create more investment dollars in that jurisdiction. But most people who understand accounting knows that that's an additional layer of cost. So they all say, well, your property tax don't go anywhere. It stays level. But then you have another layer, almost like a stacked layer of cake, you know? That layer of 3,000 is added to that 5,000 annual bill that you normally would have. So with that now, you're having to pay $3,000 more. Most people don't have extra 3,000 to pay. So you're literally squeezing them. So they have to take money from other parts of their life to pay the extra 3. And then if they pay 3 this year, what about next year when that extra goes up to 5,000 on top of the existing 5,000 property tax? So with this plan, it takes care of that. There's enough for the property tax, there's enough for the TAD, and other things such as windows, doors, roofs, you name it, to make sure people can stay into their house. Now, I'll give a quick illustration without boring you. And the example is, let's say a person bought a house 30 years ago and they put $5,000 in this account. And then every month they put $500 towards this account to let it grow over 30 years at an annual return rate of 10%. When we do the calculation, that account will be worth $1.1 million. And it would generate over $100,000 in actual returns to more than pay for the property tax, TADs, and every other expense you can throw at this particular parcel. And the thing about it is each parcel, it becomes an entity, right? That's linked to this account and it's transferable. So if a person were to sell a parcel and go and live on another parcel, it goes wherever the owner goes. And that now creates ultimate ownership. Instead of having your ownership tied to equity, you have your ownership tied to the property savings account. And that is a transferable wealth that you can transfer throughout the state, or if it's adopted nationwide, you can take that same wealth wherever you go. So instead of just tying people to equity, which by the way, you can't tap into equity unless you have a favorable credit score or you have income to justify taking out an equity line of credit or a HELOC. But with a property savings account, you just go and draw the money out. No question asked, because you own the value that's in that account. And so with that, we're not creating anything new. All we're doing is taking an existing infrastructure that is in the financial market, and we're now connecting it to paying for property tax and all the costs related to having a property, what they call so-called home ownership. And that's kind of where it's at, to make sure that people can live in their homes forever, and they can also transfer the wealth to their heirs as well. And they now can have resources to pay for the upkeep of those properties once the original people transition over to the next dimension of the continuous life that we live, right, spiritually. And so that's where we are. And if you have the time, take a look at the article on living ecosystem design on LinkedIn. Go ahead and follow me on that channel as well. And if you're getting some value from this video, go ahead and hit the subscribe button, hit like, share, and be notified whenever I drop videos. Every Sunday, I'm going to be dropping articles like the Sunday newspaper. Most people don't get Sunday newspaper no more, but I'm going to digitally drop my Sunday newspaper with these articles to share strategies and ideas to help improve our living ecosystem in the Atlanta region and the state of Georgia. I know we can do it. We got brilliant people out there willing to do the work, and if we can have political will to get these laws and these measures into law, then we can definitely impact people today and the next generation to come from the work that we have done. But take a look at that and see how you can add value to the framework. And if you need further details, you can contact me and we can talk more about that. I'll just give the framework of the design, but the details are held within without having to give too much out there. So until the next time, this is Neil O. Campbell with Living Ecosystem Design. Have a good night, or wherever it is, if it's good night or AM, or we'll until the next video. Take care.